take a look at the market today for March 10th, 2025, and it was a bloody day on Wall Street. You had a follow through into the start of the week from last week's losses. Despite Friday's bounce, you're not getting any traction to the upside. Every rally is getting sold, and you see that mainly with those big tech names. Tesla down over 15% today, Nvidia down over 5%. Apple had an uncharacteristic as of late sell-off, down almost 5% on the day. Microsoft 3.3, Meta 4.4. And you had the big banks once again. JP Morgan down over 4%, Bank of America down 3.8%, Wells Fargo down 6%. So, and Goldman Sachs down 5%, Blackstone down 4%, Morgan Stanley down over 6%. So you continue to see these mega caps really taking it on the chin, and it's a rotation here. You're still seeing gains out of consumer staples. Companies like Procter & Gamble, Coke, they eked out a gain. Pepsi up over 1% on the day. Some in the healthcare space outside of Eli Lilly, which continues to be down 4.5%. A lot of this is growthier names. It's not just the big Mag 7 names. It's the growthier names in the market, which Eli Lilly was one of those with the GLP-1 drugs and all of that, but that's coming undone as well. So what you're seeing are market multiples coming down as the money flows out of the United States. The dollar is reversing, and there's heavy concentration of foreign ownership into U.S. stocks. And when the dollar reverses, they're losing on a foreign currency basis. They were getting a double whammy. Stock prices going up and the dollar going up, and that was good for them. And that's why so many foreign investors were crowding into the U.S. This is where the growth was worldwide, especially with China having their issues. But that's all reversing in a big way. European stocks are up. You're seeing Germany looking to spend more on defense and infrastructure, et cetera, and just changing the dynamics of the European economy overall. And so you're getting some nice strength overseas, and that's money flowing out of U.S. markets. We know there's a lot of speculation as well in U.S. markets, especially those Mag 7, record option activity, which means dealer hedging, which means when it's reflexive both ways, meaning when stocks go up, those dealers have to hedge and buy more of the underlying, and that has pushed a lot of these names higher. But what happens is when that reverses, whatever the catalyst is, and clearly it has to do with tariffs, it has to do with just the changing world order, the money is flowing the other way, and suddenly those dealers, they're having to unwind their hedges. They don't need those hedges anymore because those stocks are so far out of the money, or the options are so far out of the money. So that's what is happening here in a big way. Now, a lot of that gamma hedging unwind comes off around 5,500 on the S&P. We're at 5,600 right now. So we're getting close to that level, which means, could we get a bounce soon? Yeah, I said that over the weekend. If you go watch my video that I put out on Saturday, I said, there's another level lower that we could get to before we get that bounce. And now we're pretty close to it. I said we needed to get above Thursday's high. That was a big sell-off day, a bounce on Friday. But once again, we didn't really see us even testing those Thursday highs. But you could always get that follow through, today and start to work your way up above Thursday's high. And then you could say, okay, that the bottom is in. Now we have a new line in the sand, and that is today's high, Monday's high. And if we reverse and we get above today's high, that could mark the signal for the bottom in markets. And so that's what we will be watching. Certainly could find a little more downside here, and maybe the bounce is minor. Maybe the bounce only is 3, 4, 5%, and it's a meager dead cat bounce, and we head lower. Obviously, with a lot of policy uncertainty, economic uncertainty, there's certainly potential for even more downside from here. It feels bad, right? The Nasdaq down 4% on the day, S&P down 2.7 on the day, the Dow only down 2% on the day. A lot of the value stocks, we did fairly well today for our clients because we weren't in these Mag 7 because we knew how overvalued and how risky they were. And so this is a very interesting time in markets. I said going into this year, it's unlikely to be what we saw the last couple of years. It's likely to be a choppier market. Doesn't mean it can't be a positive year. Right now we're negative on the year, but that doesn't mean that the year has to end negative. We could bounce around. There's likely to be big sell-offs like we have now, as well as big rips higher. Now, from what level, that is another question. But we are getting to that level. The VIX is up above 30 now. And so this typically is a period of time when things could certainly reverse. Now, probably needs a catalyst of some type. When you're down here and you exhaust all the forced selling, which I think a lot of this was, then you could see an easy bounce just on minor news. So I wouldn't be surprised to see one by the end of the week, but I also wouldn't be surprised to see another, 2, 3, 4, 5% down from here before we ultimately get that bounce. So very interesting day in markets, blood on the streets. Tomorrow's Tuesday. There's an old adage, turnaround Tuesday. Do we end lower? Do we start lower tomorrow and get that turnaround by end of the day? That's something to think about as well. And next week we have the Fed meeting, and so the market will start to focus on that as well. So that was the market for today. Actually, I want to get to real quick before I close. You had Bitcoin down 9.6% of the day, but gold. Everyone's talking about gold, Bitcoin being a new gold. Gold is a safe haven still. Still only down 0.5% on the day. Crude oil down 1.5% on the day, but a lot of the energy stocks certainly reversed, and so did oil late in the day. It reversed. So dollar index that was up slightly, but still remains in a downtrend. So very interesting markets, and we'll see what we get, and we get that turnaround Tuesday tomorrow. But that was the market today for March 10th, 2025.